I'm Karl Kyler, your San Diego realtor, and we're officially into June, and that means we get to review the May numbers. Now, you might have saw the Redfin report that talked about how we're officially in a buyer's market. Redfin reviewed 50 of the top metros in the entire country and found about 31 of them were in buyer's market. San Diego did make that list, but by barely. We were 14% more buyers than we were sellers. Well, I'm gonna dig deeper into that report, not directly, but I'm gonna make it applicable to the data we're gonna see in the May numbers. And we're gonna see exactly how that surplus of 14%, and I'm not sure exactly how they're getting that surplus of 14%. Maybe they're measuring buyer applications, like loan applications. But we're gonna look at the context of that report and apply it to the May numbers so we can see exactly what's happening and where our market's going here in San Diego. Now, real quick, if you haven't already, be sure to like and subscribe this video. And if you're thinking of buying or selling, my contact info is in the description below. Feel free to reach out to me if you have any thoughts, questions, concerns about buying or selling here in San Diego. Now let's jump into the details here. To start off, the monthly snapshot. This is just 3 metrics of the combined data from the detached and attached mashed together, okay? So just be mindful of that detail. We're down 9.4% closed sales of all properties, okay? So we're selling almost 10% less homes than we did this time last year. Despite that, we're up 0.2% in the median sales price, and we're up almost 35% in total inventory. How are we down sales, up price, and at the same time, up a dramatic amount in inventory? Well, that's what we're gonna dive into. Let's kick things off with new listings. New listings is a really good metric to determine the type of relation between buyers and sellers in the market that we just left, May, and the market going forward. If we have a ton of listings coming to market, then we know that maybe there's gonna be more options for buyers, and at the same time, that negotiating power between buyers and sellers may shift a little. In the month of May, we had 2,159 new listings on the detached side and 1,301 new listings on the attached side. For May, that's a decline of 2.4% in new listings coming to market from this time last year. On the attached market, it's only up 4.6%. But if you look at the data from the past months, let's just look at the detached. 23% in January, 18, almost 19% in February, almost 16% in March, 13% in April, then negative 2.4%. So since January, our new listing inventory has been going down. Similar trend on the side of attached. We started at 26% in January, down 23. Then we had this big jump to 33% in March, but then back down to 20 and then down to only 4.6% positive. Not exactly the dynamic we see at this time of the year, which kind of tells me, maybe more sellers are electing to stay in their homes, and this could be because of the affordability issue driven by not just interest rates, but also tariffs. Next, pending sales. Pending sales is a really, really important metric to look at in understanding where the market is going. So let's dive into this real quick. For the detached market, we had 1,400 homes going to escrow. That means they accepted an offer and they went into pending status. That's down 3.7%. On the attached side, we had 709. That's down 9%. Those aren't numbers that we should be seeing in May. So this can mean one of two things. One, the amount of new inventory coming to market was down, so buyers had less new options to look at and latch onto and put into escrow by making an offer. Or two, buyers are being extremely more picky. They're being limited by affordability constraints. It could be economic concerns, right? So buyers are not jumping into the market. More buyers are withholding or unable to qualify. And though it could be one or the other, I think it's a blend of both. We did have new listings come down, so we had less available options, new options, and buyers are strapped, right? The cost of living, even though PCE are personal consumption expenditures, I always struggle with that abbreviation. Even though PCE inflation is down, it's showing really, really well. 2.1% is at what it's at now. Even though inflation is coming down, interest rates are still at 7% or slightly higher, depending on your down payment and your credit scores. The trend we should see into June and July is we should see this number go up slightly, but not in proportion to the number of homes that should come to market. So we just exited peak price time of the year, okay? From here on till the end of the year, you're not gonna get as much drive for high pricing. It's not to suggest that prices are gonna go down, you just can't price as aggressively. More buyers pull off the market. School's out, they do their vacationing, they do their traveling, and they kind of put buying to the back burner. Where sellers who kids are out of school, now they can put their homes to market because they want to get into the new home before their kids start back to school or whatever the other dynamics are. There's more than just family dynamics out there. Those new listing inventory typically rises into the summer while pendings come down. So I think that this -3% and -9% on both sides, that's steep. That's not what we should see in May. Hopefully it will come back as a positive number into June, which is kind of what I expect. But if it's negative as inventory goes up, then that's more of a sign that there's gonna be more and more deals that could benefit buyers. Now, that's not suggesting that prices are coming down exactly, not exactly, but just more inventory, or I shouldn't say inventory, more inventory for them to pick from, which means more negotiating power. Next up, closed sales. On the detached side, we had 1,328 homes close. Escrow means they sold, they closed, they passed on to the next property. That's down 7%, pretty significant. On the attached side, we had 689, down 14%, another significant number. What's the most significant here is that we shouldn't see negative numbers in May. We should see that number actually staying positive, if not going up from April. Typically, we see the number peak in May and start coming down in June. So the big question, what's driving this lack of properties closing in May? Well, affordability, like I just mentioned when we were talking about pending sales. And also there's a lot of volatility in the markets in May. So there's probably a lot of buyers. And this is kind of what I'm experiencing with my buyers that are not first-time buyers, but more so move-up buyers. They have a lot of hesitation because they're lacking a lot of confidence in the markets right now. So they just don't know. So they're holding back and waiting for some security or some certainty in the markets before they say, okay, yeah, you know what, maybe we could, or maybe we should make the next move. On the first-time buyer side, I do a first-time buyer webinar almost every week. If you're interested in it, I'll drop that link in the description below where you can sign up or check it out. The first-time buyers are only limited by the interest rates, and then 2, the down payment. At our purchase prices here, which I'll cover in just a second, coming up with the down payment and then having to swallow a 7% interest rate for your mortgage, it's a tough pill to swallow. Okay, now, median sales price. Not a big fan of this number, but I do appreciate it more when it's divided, when they just take a median sales price of the entire market. I think that's horribly inaccurate. So on the detached side, we had a median sales price of 1.1 million, up 0.9%. On the attached side, 690,000, up 1.1%. So let's wrap our head around this. We have inventory going up, pending sales coming down, closed sales coming down, all while prices, though only a little bit, they're going up. Just if we look at year to date, on the detached side, we're up 2.3%. On the attached side, almost 1%. So why is this happening? Why are prices still going up when the other metrics really don't support that kind of data? Well, here's one of the main reasons why. We're not seeing prices come down, probably because buyers are taking advantage of different strategies when it comes to securing a property. And here's an example of one. Closing cost credits, something that buyers weren't able to ask for in the past. Though it's not guaranteed, and please don't interpret this incorrectly. This is very market sensitive and property sensitive, but we are seeing more sellers being open to closing cost credits. Okay, that's to cover just the closing cost. The other category is rate buy downs. I talked about this with Matt.Kish from Movement Mortgage. If you want to check out that video, I'll try to drop it at the end or have it come over the screen or something like that. But we talked about not permanent rate buy downs, but temporary buy downs. So you have 2-1 buy downs, 3-1 buy downs, or 1-1-0 buy downs. These are temporary ones that give the buyers immediate relief on payment now to allow them to weather the storm for mortgage rates to naturally come down, and then they can refi into a lower mortgage rate at that time. So instead of buyers going in trying to beat up the seller on price for something that's been maybe sitting for a while, they're going and instead saying, okay, cool. We'll give you your price, but we want X amount in closing costs, or we want X amount in a temporary rate buy down. Next, attached sales price. Okay, just like median has its negatives, average sales price also has its negatives. That's why we look at both. I prefer the average sales price. I think it just gives us a better perspective of what the prices are doing in San Diego County. For the detached market, we're over 1.4 million. On the attached market, we're in the 840,000 range. Detached were up 1%, attached were up 2.3% year over year. Now, year to date, we're up 1.3% and up 1.5% between detached and attached. So same dynamics we're seeing in the median sales price. I just think that this is a better perspective of what I'm seeing buyers are actually seeing in the market. Can you find attached homes sub 842,000? Absolutely. My first time buyer webinar, which I just mentioned, a lot of those buyers that do buy into the attached market, we're typically looking around 600 to 750,000. And that's a big range because it really depends on location, of course, but more so if they want in-unit washer and dryer and the number of parking spots, if it comes with an attached garage or open parking, or one spot or two spots. So those are really, really big dynamics that are important to first-time buyers when they're looking in the attached market. Next up, days on market, pretty consistent trend, 30 days up 11% for detached, 37 days up 37% for the attached market. If we look back at the history, in January we're at 44 days, then we went down to 36 days, then in March 33, April 32, May 30. This on the detached side, this is detached only. We should start to see that number come back pretty slightly though, just slightly. On the attached side, very, very similar tendency, right? So January 46, 41, 39, 33, descending, right? Then May, we went up to 37 days. That's crazy, especially when we had a shortage, or I should say a decline in new listing inventory come to market. So we're seeing the condo side or the attached side of the market sitting even longer. And that will, like I said, just like with detached, that number should go up in June. So if you're looking as a first-time buyer to get into the attached market, you might be looking at some really, really good deals as we move deeper into the summer. All right, now for total inventory of homes, we covered new listings, which is all the new inventory coming to market. Now this is the total inventory, and some pretty exciting news here. Up 25, almost 26% on the detached side, 3,556 homes. That's not a lot, but it's an improvement. So there's more options for buyers to look at. Now you can look at 4, 5, 6 homes at a time. On the attached side, 2,498, practically 5,000. That's up 50%. If we combine these two, we're over 6,000 homes on the market, which is huge. We've been sub 6,000 homes all year, which has been really, really restraining on buyers' availability. And this number will continue to go up. Now we're a long way from pre-pandemic. Pre-pandemic, we were well over 10,000 homes. This is gonna provide more options. And if interest rates don't change, this should hold pricing or possibly bring it down. And to wrap this whole thing up, total market overview, new listings. This is, again, total market overview is detached, attached together. So they're just combining all the metrics there. New listings, 3,460 new listings to the market, up 0.1%. That's kind of a rounding error there. So we can just say pretty much nothing compared to last year. Pending sales, 2,109, down almost 6%. For closed sales, 2,017, that's down almost 10%. Median sales price is up 0.2%, that's at $920. On the average sales price, up 2.2%, $1,235,000 some change. I hate when they do the median average price for both detached and attached together, but the metrics are still consistent in the same direction. We saw positives on both of those for median and average. Days on market overall, 32 days. That's still pretty reasonable for San Diego County. Total homes for sale, which I just kind of covered, over 6,000, 6,054, up 34.6%, which is awesome. We need that inventory. We need interest rates to stay where they are. I know it sucks when it comes to affordability, but if we really, really want to make an impact on pricing, we need more inventory to come to market, and we need less buyers to be able to soak up all the inventory right away. That's it for this week's San Diego Market Matters. Really, really quick, thank you so much for the likes, subscribes, and the comments. I announced last week that I broke 300 subscribers, which I know that doesn't mean a lot. It was a big number for me, being the fact that I'm a beginner starter channel. I think I'm a year and 4 months in right now. Then in that week, I had that video was turned in my top performer. I had over 1,800 views, a tremendous number of comments and engagements, which was fantastic. I see the community engaging, having really, really good conversations about the details and the data of the market. And then I also got, I think, a record number of subscribers in 1 week. I think it was either like 55 or 54. Normally I get like 2 to 8. So thank you if you jumped on board and subscribed. I really appreciate your support. Those that watch and like and have continued to subscribe, thank you all. I'll continue to bring you quality content regarding the San Diego real estate market. If you haven't liked and subscribed yet, love to have you on board. If not, no worries. I'll catch you with another video. As always, I'm Karl Kyler, your San Diego realtor. I'll see you next video.